Have you ever wondered if money could be truly free? Not free in cost, but free from the control of any single bank, government, or corporation? What if we could build a stable currency, a digital dollar, that belonged to everyone and no one? A form of money built on trust in code rather than trust in people. This isn't a far-off science fiction dream. It's the story of Dai, a revolutionary digital currency born from a vision to create truly trustless money. This is the journey of how a small group of idealists dared to challenge the very foundations of finance, navigating storms and crises to build a pillar of a new decentralized world. Our story begins in 2014, a time when the world of cryptocurrency was a wild, untamed frontier. Prices swung dramatically, making it impossible to use these digital assets for everyday transactions. Imagine trying to buy a coffee when its price could double or having the time it takes to brew. It was in this chaotic landscape that a visionary named Rune Christensen and the Maker Foundation began to ask a profound question. Could they create stability in the midst of volatility? The goal was audacious: to build the Maker Protocol, a decentralized application running on the transparent ledger of Ethereum. This protocol would not be just another token. It would be the bedrock for a new kind of currency, one that could hold its value and serve as a reliable means of payment and a safe store of wealth in the digital age. This wasn't just about technology. It was about building a more open, equitable financial system for everyone. After years of meticulous development and testing, a trial version known as Single Collateral Dai or SI paved the way. Then, in 2017, the moment arrived. The full version of Dai was launched, a stablecoin designed to maintain a soft peg to the US dollar. This wasn't just an upgrade. It was a paradigm shift. The new system, called Multi-Collateral Dai MCD, broke new ground by allowing a diverse range of crypto assets to be used as collateral, strengthening its foundation. But the most revolutionary step was yet to come. True to their vision of decentralization, the creators began to step back. Control of this powerful financial engine was handed over to MakerDAI, a decentralized autonomous organization. This meant that the protocol's future would not be decided in a corporate boardroom, but by a global community of MKR token holders. Through a democratic voting process, this community would collectively manage the system, deciding on everything from stability fees to which new assets could be accepted as collateral. The power was now in the hands of the users, realizing the dream of a currency governed by its own community. So, how does Dai achieve its remarkable stability without a bank account or a central authority backing it? The answer lies in a brilliant and elegant mechanism called over-collateralization. This is what truly separates Dai from its centralized counterparts like USDT or USDC, which are backed by real-world assets held in a bank. To create Dai, a user doesn't buy it. They generate it. They do so by locking up a crypto asset they own, like Ethereum, into a smart contract known as a Maker Vault. But here's the crucial part. To generate, say, 100 Dai worth $100, they must lock up collateral worth significantly more. For instance, $150 worth of Ethereum. This excess value, the over-collateralization, acts as a powerful safety cushion. This cushion is designed to absorb the shocks of the notoriously volatile crypto market. Think of it like a shock absorber on a car, smoothing out the bumps on a rough road. If the price of the locked-up Ethereum were to fall, the extra value ensures that the 100 Dai in circulation are still fully backed. But what happens if the collateral's value drops too far, threatening the stability of the entire system? This is where the protocol's self-healing power kicks in. If the value of the collateral falls below a predetermined safety threshold, the system automatically triggers a liquidation process. The locked-up assets are sold off in an open, automated auction to recover the outstanding Dai plus a penalty fee. This swift and partial action ensures that every single Dai remains backed and the peg to the dollar is preserved. It's a system of checks and balances written in code that operates without human intervention, maintaining trust through transparent, predictable rules. Initially, only Ethereum could be used to mint Dai, but the system has since evolved. Embracing a wide array of digital assets like wrapped Bitcoin, WBTC, and other tokens, diversifying its foundation and making it even more resilient. Almost immediately, Dai became more than just a stablecoin. It became the lifeblood of the burgeoning decentralized finance, or DeFi, ecosystem. In a world where asset prices could plummet overnight, Dai offered a sanctuary. Traders and investors could move their funds into Dai to hedge against market volatility, preserving their capital without having to exit the crypto ecosystem and convert back to traditional fiat currency. This simple utility made it an indispensable tool for anyone navigating the digital markets. But its role quickly expanded. Dai became the default currency of DeFi. It was the primary asset for lending and borrowing on platforms like AB and Compound, allowing users to earn interest on their holdings or take out loans in a stable medium. It was the trusted unit of account in countless yield farming strategies and liquidity pools, where users provide assets to decentralized exchanges to earn rewards. Dai wasn't just another token. It was seen as the most legitimate, the most decentralized, the most crypto-native stablecoin. It embodied the very principles of DeFi. To further this, the Maker protocol introduced the Dai savings rate DSR, a groundbreaking feature that allowed anyone, anywhere in the world, to deposit their Dai and earn a stable, variable interest rate, all directly within the protocol. It was, in essence, the world's first decentralized savings account. A powerful tool for financial inclusion built on a foundation of pure code. The journey, however, was not without its trials and tribulations. Being a system built on algorithms and volatile collateral, Dai faced moments of extreme stress that tested its very design. During severe market crashes, the rapid drop in collateral prices pushed the liquidation system to its limits, sparking intense debates about its resilience. Furthermore, to enhance stability, the MakerDAO community voted to include centralized stablecoins, like USDC, as a form of collateral. While this helped maintain the peg, it also introduced a new, uncomfortable risk: dependency. If USDC, a centralized entity, were to face regulatory issues or lose its own peg, it could create a cascading crisis for Dai, a paradox for a project founded on the principle of decentralization. This tension came to a head following the unprecedented sanctioning of Tornado Cash, a decentralized privacy protocol. The event sent shockwaves through the community as it became clear that assets like USDC could be frozen by a central authority. This forced a soul-searching debate within MakerDAO. Rune Christensen, the founder, publicly shifted his stance, arguing that the protocol needed to double down on its decentralized ethos. The community began to explore ways to reduce its reliance on centralized assets and even debated the controversial inclusion of real-world assets RWA like real estate or invoices as collateral. This move could increase Dai scalability but also risked reintroducing the very centralization and regulatory pressures the project sought to escape. To further its independence and improve performance, Dai also began a strategic expansion onto multiple blockchains beyond Ethereum, aiming to become a more accessible, efficient, and truly chain-agnostic stable currency. Through every crisis, every debate, and every evolution, Dai has not only survived but thrived. It stands today as a monumental achievement in the world of finance, a testament to the power of a decentralized community armed with a powerful vision. It provides a form of stable money that is transparent, borderless, and operates completely outside the confines of the traditional banking system. The journey of Dai is more than just the story of a cryptocurrency. It is the story of a relentless pursuit of an ideal. It is proof that a community of builders, thinkers, and believers can come together to create a more open, resilient, and equitable financial future, one line of code at a time. It is the story of trustless money, built by the people, for the people.